Hey tech aficionados, welcome to the Tuesday edition of Tech Stocks Daily. Get ready because today we've got Apple unveiling its new iPhone 16 lineup with shiny features and messed up AI. A solid update from Google juggernaut landing hefty renewable deals and taking blows from antitrust fines. All while Oracle surfs on a wave of record stock growth thanks to knockout earnings and killer cloud partnerships. And buckle up for the roller coaster ride that is super microcomputer, caught between lawsuits and the booming AI market. Stay tuned for all the sizzling tech stock drama. Hey tech enthusiasts, buckle up because today we are diving deep into Apple's jam-packed day of news and how it's shaking up the tech world. First off, the big news. The iPhone 16 lineup was unveiled at the It's Glow Time event. The new iPhones come in 4 shiny models: iPhone 16, 16 Plus, 16 Pro, and 16 Pro Max, all juiced up with Apple's latest A18 Bionic chip that's up to 30% faster than the previous A16 chip. Plus, the Pro and Pro Max models now come ready with the highly anticipated Apple Intelligence, Apple's take on generative AI. But not everyone is clapping their hands. The buzz turned out to be more of a hum. Analysts voiced mixed feelings over Apple's new offerings. While some industry experts think the AI feature sets a new standard, others think Apple isn't strutting as confidently as it used to. The lukewarm response did have some repercussions. Apple's stock saw a dip, now floating around a 4-week low. So what's unique besides some sleek new colors and that nifty customizable action button? There's the camera control button that's all touchy-feely with its touch and pressure sensitivity. And don't forget Apple Intelligence. Though still in beta, it's meant to beef up your iPhone's smarts, even if testers noted some hallucinations, aka glitches. Next up, let's talk money. Imagine earning $500 a month just from Apple stock dividends. Sounds tempting, right? But there's a catch. You'd need a hefty 6,000 shares worth about $1.3 million to pull it off, given Apple's current dividend yield of 0.45%. Anyone shopping for alternatives? Google and Samsung are knocking at your door. Google Pixel 9 models are designing themselves in Apple-like attire with that touch of AI, and Samsung's Galaxy S24 series comes with its own Galaxy AI, aiming to reach a whopping 200 million devices by year-end. Even budget-friendly giant OnePlus is introducing AI tools on their new OnePlus 12, sans the sticker shock. But if you're a hardcore Apple fan, investors are still betting big. Analysts at Wedbush forecast nearly 90 million in iPhone 16 shipments, hinting at a potential rise in Apple's valuation to a jaw-dropping $4 trillion by 2025. Despite this optimism, Apple's share in the US stock market brings a certain reality. 40 see bullish futures, 7 hold neutral views, and 2 remain wary. However, over at the European Court of Justice, Apple isn't getting a free lunch. The company faces a $14.4 billion tax repayment to Ireland after a 6-year saga around illegal tax benefits. And there's drama in China as well. Consumers in the world's largest smartphone market are curiously unmoved by the iPhone 16, finding more magic in Huawei's AI-powered trifold phones. The hashtag iPhone 16 Chinese version doesn't support AI yet blew up on Chinese social media, racking up millions of views. So Apple isn't just battling on product fronts, it's holding its ground in financial realms and in global markets. Need a real-time deep dive? ETFs flooded with Apple stock like Vanguard Information Technology ETF might be your new BFFs. Analysts upped their price targets, with some highlighting an impending super cycle brought on by Apple's AI plunge into iPhones. There you have it, folks, a whirlwind day in Apple's world. Keep your eyes peeled for future updates on how all these tech titans face off in this ever-prepping digital arena. Stay techie. Hey tech fans, buckle up because today we've got a Google News avalanche. Google found itself embroiled in everything from huge renewable energy deals and hefty antitrust fines to critical advancements in fact-checking tools, and even got caught in the middle of a deepfake crypto scam extravaganza. Let's unpack all this Google goodness, or should I say Google craziness. First up, our eco-conscious hearts got a little warmer today as Google announced a mega renewable energy partnership with X-Elio. Google signed a power purchase agreement for a whopping 128 megawatts of sustainable energy from X-Elio's Bell Solar PV plant in Texas. This solar farm won't just light up Google's world, it's going to power their operations in Texas, complete with a 24/7, 100-megawatt battery energy storage system. Talk about energy you can count on, like your ex's drunken voicemails. Google's taking strides toward meeting its 24/7 carbon-free energy goal by 2030, ensuring that our cat videos and cloud backups are powered a bit more sustainably. Meanwhile, not everyone is throwing a Google parade today. Google's facing a massive antitrust case, and a GOP lawmaker is coming to their defense, calling the legal actions against Google insane. Senator Rand Paul said it's crazy for the government to penalize Google for, well, being good at business. The Department of Justice, however, thinks differently, accusing Google of monopolistic practices in the ad tech market. The stakes are high, and the courtroom drama is just getting started. Speaking of courts, Google took a serious financial hit today. Europe's top court upheld a gigantic €2.4 billion fine against Google for abusing its dominant market position by favoring its own shopping comparison service over competitors. Google retuned its shopping service back in 2017, but the European court wasn't buying the changes, asserting that Google still had to pay up, big time. Think of it as a pricey reminder that playing favorites doesn't go over well when you're a market behemoth. With all this going down, Google also took time to focus on something we can all get behind: fact-checking tools. At the Global AI Summit in Riyadh, Google underscored the growing necessity for users to be empowered to verify the authenticity of online content. As AI tech advances, so does the potential for disinformation, making these resources ever more vital in our digital age. Finally, as if that weren't enough, Google's deepfake woes also hit a new high when scammers used a sophisticated AI-generated fake of Apple CEO Tim Cook to swindle crypto enthusiasts during the unveiling of the latest iPhone. This scam asked viewers to send cryptocurrency with a tantalizing promise of doubling their investment. Spoiler alert, it's a scam, folks. YouTube has since taken down those streams, but the errant viewers' tears may never dry. So there you have it. From collaborating on a greener future to battling antitrust allegations and navigating deepfake turmoil, Google had a headline-hogging day. Let's see what tomorrow brings in the wild world of tech. Hey tech enthusiasts, buckle up because Oracle is making big waves today. Let's dive into all the latest action-packed updates surrounding Oracle that have traders buzzing and the stock market heating up. First off, Oracle's stock price soared today, jumping a whopping 12.3% during the morning trading session. So what's behind this meteoric rise? Oracle just dropped their first quarter results for the current fiscal year, and they didn't just meet Wall Street's expectations, they blew right past them. Oracle reported non-GAAP adjusted earnings per share of 139 cents on revenue of $13.3 billion. Analyst targets, Oracle outperformed them by 6 cents per share and beat revenue forecasts by $60 million. Investors, naturally, were delighted. But there's more to the story. Beyond the impressive numbers, Oracle also announced some major strategic cloud partnerships with the likes of Amazon and Alphabet's Google Cloud. If you're into the cloud infrastructure space, this news is like a double espresso shot. For starters, Oracle's total cloud revenue jumped by 21% year over year, climbing to $5.6 billion. Within this, the infrastructure as a service segment grew an eye-popping 45%. Meanwhile, their software as a service revenue rose 10% to $3.3 billion. Such figures are more than just decimal points. They show Oracle's climbing momentum in a highly competitive landscape dominated by giants like Amazon, Microsoft, and Google. Moreover, Oracle also highlighted their new partnership with AWS, which will allow AWS users to seamlessly leverage Oracle's autonomous database and Exadata service. Oh, and this service is set to kick off in December, just in time for some holiday tech cheer. Not stopping there, Oracle similarly integrated offerings with Google Cloud to make their solutions even more accessible and versatile. Another exciting piece of news is Oracle's partnership with Guardian Life Insurance Company of America. Guardian has moved key finance and operations processes to Oracle Fusion Cloud ERP to increase productivity, reduce costs, and enhance decision-making through AI innovations. By moving their disparate on-premises systems to Oracle Cloud ERP, Guardian has unlocked significant value from their data and streamlined their finance operations. Industry analysts are also pumped about Oracle's future prospects. Multiple analysts have updated their price targets. For example, BofA Securities boosted it to $175 from $155, and Morgan Stanley hiked it to $145 from $125. Such positive re-ratings aren't just pretty numbers. They're a solid vote of confidence in Oracle's growth trajectory. And if you're wondering how Oracle's bosses are feeling, CEO Safra Catz was all smiles as she highlighted that cloud services are now Oracle's largest business segment. She emphasized that the new multi-cloud agreements and the strategic cloud alliances are paving the way for even more robust future growth. So there you have it, folks. A day packed with great earnings, strategic partnerships, and rising stock prices. Stay tuned because Oracle seems to be on a hot streak. Today's tech buzz centers on the tumultuous ride that Supermicro Computer Inc. has been experiencing lately. So what's been happening with SMCI? Let's dive right in. First up, the Gross law firm issued a call to action for SMCI shareholders. They're encouraging anyone who purchased SMCI shares during specific periods to step forward and potentially join a class action lawsuit. The clock is ticking with an October 29, 2024 deadline. This move comes on the heels of a scathing report from Hindenburg Research, dropped on August 27, 2024. Now let's take a look at this Hindenburg bombshell. The short report claims that Supermicro is tangled up in several alarming issues. We're talking alleged accounting red flags, undisclosed related party transactions, sanctions, control failures, and customer quagmires. Yikes. This wasn't just smoke. It was a full-on fire causing quite a stir among investors and analysts alike, which reflected severely in the company's stock price. From a high of $562.51 per share on August 26, 2024, the stock plummeted to $443.49 just 2 days later, marking a 21.16% nosedive. In the second article, we get a broader scope of the fallout and a heated debate on whether investors should hold, sell, or buy more of SMCI stock in light of these revelations. Prior to the report, SMCI was riding high, soaring past NVIDIA in performance and making it to the S&P 500. But Hindenburg's claims, alleged accounting manipulations, and export control failures turned the tide. Despite the hit, there's some interesting disharmony between the reports from Hindenburg and Supermicro's defense. Supermicro has refuted the allegations, blaming inaccuracies and misrepresented facts. They're pushing to complete their delayed 10K filing, promising only minor tweaks. So there's a silver lining that this might just be a storm they can weather. Moreover, SMCI's involvement in the booming AI market could be their ace in the hole. AI chips and servers are hot commodities, and Supermicro's investment in these tech gold mines could see substantial growth, leveraging a 38.2% CAGR projected for AI chip markets by 2032. Sure, they've only conquered 10% of the AI server market, but the growth potential is undeniable. Still, let's not sweep the concerns under the rug. Supermicro is grappling with cash burn and margin pressures, which could affect its financial health. The need for significant working capital to provide those juicy AI server solutions can pinch those margins. Market analysts are giving SMCI a hold rating for now, suggesting that patience might be the order of the day until the air clears around these allegations and financial pressures. So there you have it. From lawsuits to potential market rebounds, SMCI is in the eye of a storm right now. What do you think? Is Supermicro a sinking ship, or do they have what it takes to sail through the tempest and emerge stronger? Let me know your thoughts in the comments below. Do you plan to hold, buy more, or sell your SMCI shares? Let's discuss. Hey tech family, let's dive a bit deeper into this roller coaster. Today we're looking at one of the stocks from our report, and that's Supermicro Computer. With all the buzz from multiple fronts, it's a stock you just can't ignore right now. So, should you sell, buy, or hold SMCI? My verdict? Hold. Yeah, you heard that right. Here's why I'm giving this one a hold rating. 1. Class action lawsuit and Hindenburg research report. The Gross law firm's call to action for SMCI shareholders post the explosive Hindenburg research report is a major caution sign. Allegations of accounting red flags, undisclosed related party transactions, and more are not just smoke, they're potential regulatory bonfires. Plus, a drop from 562.51 to 443.49 is enough to make anyone feel queasy. Number 2. Potential market rebound amidst AI growth. Despite the turmoil, Supermicro's footing in the AI market is pretty solid. As AI technology sees exponential growth, the company's investments here could reap substantial rewards. With a projected 38.2% CAGR for AI chip markets by 2032, Supermicro could leverage that growth, especially if they manage to clear their current woes. 3. Discrepancy in reports. Hindenburg's report is harsh, a full-on roast, but Supermicro's response is just as forceful. If the company successfully clears these allegations as merely misrepresentations, we might see some stabilization and potential upside. They're promising only minor tweaks in their delayed 10K filing, so stay tuned for how credible their defense turns out to be. Number 4. Current analyst outlook. Analysts are recommending a hold currently, meaning they've also read the room and decided patience might help weather this storm. Given the influx of negative news and the mixed signals concerning future benefits from the AI market, a wait-and-see approach might be the safest bet. A word to the wise. Remember, this analysis is based on today's news and my interpretation of it. Always do your own research before making any investment decisions. The stock market is as predictable as a cat. A brilliant leap today, a scratch tomorrow. All right, that's my take on SMCI. What do you folks think? Sell, buy, hold, or nuke your entire portfolio from orbit? Let me know in the comments below. Today's tech market served up a full course of drama, excitement, and green energy moves. Apple dazzled with its flashy iPhone 16 lineup despite a mixed reception. Google's renewable energy deal and courtroom battles kept everyone on their toes. Oracle's stock soared on impressive earnings and stellar cloud partnerships. And Supermicro Computer navigated stormy waters with both lawsuits and promising AI ventures. As always, drop a like, smash that subscribe button, and share this video with your fellow tech heads. Be sure to come back tomorrow for another deep dive into the juiciest tech news. Stay techie.